Hi guys, this is Teacher Patty. Welcome to my YouTube channel. So we're doing now the application of the theoretical and conceptual framework in an income received in advance transaction. Okay. So on the 25th of February 2023, Jenny's Florist Shop based in Parktown received 150,000 payment from Glamorous Weddings Pty Ltd. Glamorous Weddings will be planning a big celebrity wedding on the 23rd of September 2023. The bride requested the chapel and the reception hall to be covered in cream white fresh roses imported from Italy. The florist shop's financial year end is 28 February. Ignore that. Okay, so they say identify, discuss, and conclude on the elements in the financial statement on the transaction above. Okay, we already in, if you watch the journal video and the financial statement video, we recognize a liability. Income received in advance is a liability, and a liability is the present obligation, a duty or responsibility that an entity has no practical ability to avoid, to transfer an economic resource because of a past event. Okay, so present obligation, a duty or responsibility that an entity has no practical ability to avoid. Jenny's Florist Shop has an obligation to provide the expected cream white roses for the wedding in September 2023 or refund the bride 150,000 back. It's that simple. The point of connection and the point of contact is the provision of the service. If that cannot be fulfilled, money must be refunded. To transfer an economic resource, the purchase of cream white roses from Italy or refund of the 150,000 received will lead to an outflow of economic resources either way. So Jen is not planting roses in her back garden. She is also buying them. So when she's buying them from Italy, she's going to spend money. If she's not fulfilling the order, she will have to pay back money. So either way, there's going to be a transfer of economic benefits. And then as a result of the past event, 150,000 was paid into Jenny's florist shop, and also there was an agreement reached by Glamorous Weddings and Jenny Florist Shop to provide cream white roses for a wedding. It might have been a quote and an invoice, but there is a verbal agreement or contractual agreement or an invoice or a quotation that was sent to solidify this past event. Recognition criteria. First of all, the decision of the relevant element must be met. So the definition of a liability has been met, and it must result in relevant information and faithful representation of the item. So under relevance, not disclosing cream white roses in the cream white roses order received in advance as a liability, but as income would result in higher profit than the current financial year. This can have an influence on the decisions that the users will make. There is no uncertainty regarding the existence of the liability since the amount for the cream white roses has been received in February or during February 2023. There is no outcome uncertainty since Jenny's Florist Shop is legally obliged to provide the cream white roses. Therefore, the probability of the outflow of economic benefits is not low. Then we move to faithful representation. Not disclosing the liability of 150,000 will result in incomplete information. Information will be biased if the liability is not disclosed. Incorrectly classifying the liability as income will result in errors in the financial statements. There is also no measurement uncertainty as the insurance. Oh no, it can't be insurance. About that is the cream white. That's the typo. Fresh roses amount received in advance is known. Conclusion. The definition and the recognition criteria of a liability has been met, and therefore the cream white roses amount for September 2023 will be received in advance should be classified as a liability. Guys, I hope you never struggle again. Bye.